Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mish Schneider, director of trading education over at MarketGauge. Mish, it's great to see you as always. Welcome back to Trade Talks. And we finally got the commentary out of Fed Chairman Powell that the entire investing community has been looking forward to all week.
Looking forward to or dreading, really, because a lot of people were hopeful that there was going to be some kind of a dovish sentiment from him, that he would worry more about some of the slowdowns we're seeing in the economy rather than the inflation. And yet those of us who really listened and heard, he's been relaying all along exactly what he said today at the conference, which is inflation is their number one enemy. And the number one goal that they have is to try to control it by raising the rates. So here we are, the market caught a dose of that reality today.
Yeah, I mean, and it has to be, because when you think about inflation and you think about the moves that the Fed's making, it just doesn't fix things overnight. It could take a number of months for it to finally take effect, to see those numbers come down and get the data that they want.
Yes, and today we also saw PCE was down a little bit, but the picture of inflation is complex because you have certain areas where higher interest rates have already done demand destruction, housing probably being the number one example of that, car sales, used cars, that kind of thing. What kind of impact is higher rates going to have on things that really can't be controlled because Mother Nature's got her own agenda? And I know you and I have talked about this for a really long time, but that would be energy and food prices. And so those have come down a little bit, particularly in energy, but not really so much in food. And so that's really the question going forward, is with all of the good intention by the Federal Reserve to try to curb inflation and get it back down to 2%. The truth of the matter is, if the food and prices continue to soar along with energy because of geopolitics and because of drought and fires and extreme heat and floods, then we will wonder how effective that will be. It will just sort of have to work itself out, which will not bode well for the overall market.
You know, it's interesting, Mish, in your notes to me, you had said, if you have not learned to do technical analysis, now is the time to learn how to read a chart. Why is that?
Because it was so technically perfect if we just look at the indices alone, but also even the junk bonds. But let's just take one classic example, the SPY, right? So when it dropped down to its lows, it held somewhere, we're going to call it 390. I mean, I know it went a little bit lower, but we'll say 390. And then it rallied, so it cleared the 50-day moving average, giving the signal that it was actually some kind of a temporary bottom. And then it rallied all the way up to the 200-day moving average and started to roll over and fail. So if you knew nothing else but how to read two simple moving averages, buy at the 50, sell at the 200, would have saved you a lot of aggravation from trying to short it at the lows and trying to buy it at the highs. So what's interesting, Jill, is right now, we are right smack dab in the middle. This 410 level in the SPY is 50% between those two levels. So it's really going to be what happens from here. And again, if you are a person who knows how to read a chart, we break 410, you probably at that point want to be looking at the 50-day moving average to see if it holds or not.
Right. And if we take a look at it from a sector perspective, you're saying that transportation really is the sector to watch to get some clues into what's happening with macro.
Absolutely, because if we really want to see the impact on what these higher interest rates, the inflation, these slower economic numbers that we've seen, that what it's having and what it's doing to the overall US economy, transportation is the place, right? Because it measures how goods are moving, how robust demand is, what are the consumers doing, what's the industrial manufacturers doing, how much freight's being moved, how many people are traveling on planes. And so that, to me, I mean, if you had to really get rid of all the noise and look one place in terms of the macro, that's why we're really focused on IYT right now.
And finally, you know, as we get into the more seasonally volatile September and October, I'm going to get your thoughts on Bitcoin, because along with the other asset classes, it did make somewhat of a nice run, including Ethereum as well. Seeing that pullback again today, probably predicated on what Powell was saying. But what do you think about those riskier assets as we get into that volatile time of year, more sideways chop here?
Well, yes, and maybe even another move down, maybe testing closer to 18,000. One thing I can tell you is that our staff here, who is our crypto expert, Holden, he has said to me very clearly that September is not a month you want to trade Bitcoin. Obviously, we can see it's speculative and very much tied to what the S&P is doing and the interest rates. And he feels that you really want to stay away until about October, where we can reassess how things might be. So yeah, at this point, we had one couple of good trades and some altcoins. We're out, we're flat, we're up on the year in the crypto space, and we're waiting.
All right, Mish, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.